We'll start off with a general question to Savita. It's clearly that the U.S. Stock market has had another great year. It's up 12%. It's going to be the third consecutive year of double-digit gains, and that hasn't happened since the go-go 90s. Right. And since the bull market began back in 2009, we've tripled, and we're up 200%. At the same time, there's a lot of people that say, despite the improving economy, that the bull market's getting old, and there's also the doomsayers that say this market is due for kind of a big fall. So my question to you to kick the roundtable off is the record-breaking U.S. stock market still the place to be, or is it time for investors to kind of cash in their chips and take some money off the table? What's your general outlook for the new year?
Yeah, so we're still constructive on the market. As you point out, this is a pretty old bull market. But we found that bull markets don't necessarily die of old age. They die of euphoria, everybody going all into equities, and I just don't think we're there yet. We're at a point where sentiment has improved from the very bearish levels that we saw in equities a couple of years ago, but it's still pretty tepid. I mean, the average asset allocation, to equities right now is about 50%, which is still pretty low relative to history. Valuations are a little bit fuller at this point than they were a couple of years ago. So in short, it's a little bit less easy to be bullish on stocks than it was 2 years ago, where they were the cheapest asset class around. But today I still think that there's more of a risk of upside rather than downside. So we're looking for, our target for 2015 is 2,200 on the S&P, which is about 6% away from where we are today. So we're not really looking for as strong a year as we've seen over the last few years, but still more upside rather than downside.